Welcome to Learn CFDs, and we're going to take a look at the concept of broadening your horizons using independent variables. I'll use an example, a pattern-based system that I developed over a number of years with a friend of mine based in Sydney. And when we looked at these different patterns, what we found is that we looked at the length of the pattern, the height of the pattern, where the share broke out on the pattern, etc. And we didn't get any real gain or any breakthrough until we started adding independent variables. Now, independent variables are things like volume, things like the market environment, the sector environment. This information is not contained in the price, because it doesn't matter how many times I look at the price, I'm still looking at the same thing. Most indicators built into charting packages look at the price. And what we want to do is start looking far broader than that, looking at a lot more information to make our decisions. I'll show you an example here as we move through the patterns of success development as to what we were able to do. Here's the raw patterns, and you can see there's around 30,000 trades here on the long side and another 30,000 on the short. We analysed these using a computer program, and on average the return per trade was 88 basis points, or 0.88% on the long side, and was less on the short side. It was just 0.22%. Our hit rate, how often we were right, was around 45% in here, and on average we held the trades for 9 days. Now this is the raw data. Once we put in the market environment filters, we found that the results improved quite significantly. So when the market is heading up and the sectors are all supporting that, then there's a good chance that the actual trades will go better on the long side. Here the gain moved up to 1.2% per trade and a hit rate of 48%. Now that's almost a 50% increase by running these filters. The number of trades has dropped significantly, but overall the results have improved dramatically. We then look at volume, and volume can be looked at in different ways. One is from a liquidity perspective. Can you buy and sell the actual stock when you want to? So here, this particular one, very, very low turnover, very, very difficult to trade. The other thing we looked at was the alignment, whether volume was supportive of the breakout or not. So if volume on the way up was higher than the volume on the way down, then that would support the breakout to the upside. And by adding in these filters, we improved the results to 1.81% per trade. Quite a dramatic improvement, and a hit rate of 53%. The other thing we took a look at was different patterns, and the actual patterns break out in different ways. For example, a descending triangle is better to trade on the short side than it is on the long side. And an ascending triangle, much better to trade on the long side than on the short. And by taking this into consideration and picking the best patterns for the setup, then we're able to boost the returns up to around 1.96%, almost 2% per trade, and a hit rate of 51%. So you can see here, by adding in independent variables, we're able to improve our results. And I've run similar tests using different indicators as well, and the biggest breakthroughs that I've come across are when I add in independent information that's not already there. In other words, I start looking beyond price to look at what works and what supports the breakout. So incorporate this in your trading, and you can dramatically improve your results. I wish you successful trading.